artificial intelligence, cybersecurity, and robotics. It's all coming over the next few years and is unstoppable. These are the growth themes you need to be buying for returns. But there's another theme above all others, my top investment for 2026. Many of you know I've been loading up on Ethereum ETFs since June, now with over $10,000 invested, and I'm buying more monthly to a $1.5 million target through the first half of the year. The price of ETHA, the cryptocurrency used in transactions and computing on the Ethereum network, closed down 12% last year, but is about to have its best year ever. It's the year the token will be validated as the future of finance. But I know many of you are still skeptical, so I wanted to prove it out before this all happens. Give you one last warning to invest. Understand first, I'm not going to make any price predictions. You see these all over the internet. Ethereum to $60,000 and Bitcoin to $1 million, but it's all bullshit. Unlike stocks, which can be valued on profits of the company they represent, or bonds, priced off interest rates and credit quality, there is no way to fundamentally value an asset like crypto. It's the reason why I stayed on the sideline for so long, because the price of a Bitcoin or Ether is only worth as much as someone will pay for it, and there is no way to model that in a spreadsheet or forecast it on fundamentals. Yes, I know that doesn't stop every crypto bro and their mother from forecasting prices. They look for patterns in the price, archaic mathematical relationships like Fibonacci, basically anything and everything to make sense of the price or predict the future. And like Nostradamus, they leave their predictions just vague enough that they can wiggle out of them with an excuse later. As investors, we want to look for some kind of certainty, a way to value an investment and say, I'm getting a great deal. But it just does not work with a commodity that produces nothing on which to value it. All those predictions, the forecasts for price, are more marketing than real analysis, just another way to get your valuable internet attention. But there is something more important than price predictions, a reason I am building to that $1.5 million investment. That's something taking Ethereum to the year's best investment is the unstoppable direction of finance with the power of trillions of dollars behind it. I want to start with an article arguing that both Ethereum and Solana can be winners in this trend. Not because I think there's a contest for Solana, but because it offers the best explanation of tokenization and the driving force behind all of this. It starts out, think of tokenization as turning real-world stuff, like US Treasuries, stocks, or real estate, into digital receipts on a blockchain you can trade 24/7. If you think about it, that is very similar to buying a stock. You are buying a fractional ownership of a company's profits and represented by a digital record with your broker. It's the same thing with tokenization. The custodian puts an asset, let's say an apartment building, into a legal holding company, then creates a digital token to represent fractional ownership in the asset. Instead of having to shell out millions for the property, investors can buy a single token and have that ownership right to the property and all its cash flow. But if we already have stocks for company investment, REITs for real estate, and other assets, why do we need tokenization? Why is finance about to change? Mine lays it out with 5 key reasons. Benefits to putting assets on the blockchain through tokenization. First, that fractional ownership makes it easy for anyone to invest, even if the asset would otherwise cost thousands or even millions to buy outright. Benefits especially relevant to real estate are the enhanced transparency and liquidity. When you buy a house, title insurance costs up to 1%. thousands of dollars for insurance to make sure you're buying the house from the true owner. Through tokenization, the blockchain ledger will always show exactly who owns the asset. Instead of having to wait to find a buyer for the asset, something that can take months for real estate, you can start selling your share of the asset, the tokens you own, immediately. Reduced costs and 24/7 trading are the biggest benefits, though. Selling a tokenized asset on the blockchain is instant and a fraction of the cost compared to traditional transfers like wire or bank transfers. Even a stock trade, while seemingly instant, actually takes 1 or 2 business days to clear. On these benefits, we've already started to see finance shift in this direction. The market value of tokenized stocks surged 2,500% last year to over $800 million. Robinhood offers almost 2,000 tokenized stocks, mostly US stocks, that can be bought or sold 24/7 by foreign investors without access to the US markets. Nasdaq, which sees over $6 billion in stock trading every day, wants to be next and has filed with the SEC to tokenize stocks on its exchange, and the London Stock Exchange Group has started its own project. Just last month, JP Morgan announced it has started tokenizing the money markets on the Ethereum network. The world's largest bank seeded the fund with $100 million and is opening it up to investors. This has the potential to put the $7.7 trillion money market onto the blockchain, a move that would see all the benefits of tokenization, plus a higher yield through staking. Earlier in the year, the SWIFT network, a network of over 11,000 banks and financial companies that manages wire and international transfers, said it would be creating a stablecoin, a kind of tokenization, to enable real-time 24/7 cross-border payments at a fraction of the cost. That's a market of $7.5 trillion in daily transfers. I'll explain how all this drives the price of Ethereum, but as Bitmine says in a presentation, this is truly the network's ChatGPT moment, a turning point where use cases become an inflection in history. If even a fraction of the $7 trillion money market, the $7.5 trillion SWIFT transfers market, the $37 trillion global commercial real estate market, or the $127 trillion global stock market, just a fraction of this means trillions of dollars in assets moving onto the blockchain, increasing demand for the Ethereum network. Every transaction, whether it's trading a tokenized stock, moving stablecoins in a money transfer, or changing ownership of an asset, all of this requires you to pay gas fees or compensation to change the digital ledger. At the same time, Ethereum burns a portion of those fees, reducing the total supply of ETHA. So here you get a double effect: rising demand for the cryptocurrency and shrinking supply, all driving the price of the token higher. And while there are some that would like to think other altcoins have a chance, that maybe others like Solana will also rise as its network is used, this force is all about Ethereum. The major banks and institutions are all building their projects on the Ethereum network. That network effect reinforces Ethereum's stronger liquidity and safety, ensuring that the race to tokenization will continue on its network. More than 2/3 of the total value locked in decentralized assets is in Ethereum. So while you could make the case for holding some Solana as well, the investment here is in ETHA. Again, I'm not going to put a price prediction on this because there's no model or direct correlation you can use with volume and price, but trillions of dollars are coming to the blockchain. With just $356 billion in Ethereum right now, about 120 million tokens, that is going to be an increase by orders of magnitude higher. That may not mean Tom Lee's rainbows and unicorns prediction of $62,000, which would be a 30x return, but even $9,000 Ethereum would be 3 times your money. I started buying the Grayscale Ethereum Mini Trust, ETHA, in May, around $24 per share. Since then, I've switched to buying the iShares Ethereum ETF, ETHA, and have just over $800,000 in the 2 funds. Both funds hold Ethereum futures, and charting them, you can see that both track the price of Ether exactly. The reason I switched is because the ETH has more volume, better liquidity, and so more options available with smaller spreads. And that's also the first of the reasons why I prefer buying these Ethereum ETFs instead of just buying the crypto directly on a platform like Coinbase. With the ETFs, I can use options investing to not just create income or increase return, but also to lower my risk. It's also about safety though. Buying the ETFs in my brokerage account, I never have to worry about losing my crypto password or wallet storage. One man has been searching his local landfill for more than a decade to find the hard drive storing more than $750 million in Bitcoin. With the ETFs, you also don't have to worry about hackers, scams, or even IRL thieves breaking into your home to steal your crypto. I build up that position in the ETHA fund over the first 3 months of the year. That gives me a position now, but also holds money back if we get one more dip in the price before tokenization really takes off. Thanks for watching, and subscribe to see our future videos about the amazing potential of the Ethereum ETF.